This show powered by AgriGold for Central Illinois, your AgriGold reps Brett Lahr. He is your AgriGold reps for Central Illinois. Today's edition of Back Roads of Illinois. We were Central Illinois agriculture source, and in the Midwest alongside in Central Illinois agriculture, we were glad you're here on a Monday afternoon. We were talking with new guest on today's program on Back Roads of Illinois with Bill Harvath from 834 Hedge in Cedar Rapids, Iowa. The eve of the election, we were welcoming Bill to talk about the commodities markets on the show. Otherwise, thanks to join with us. This eve of the election, tomorrow is the presidential election. Don't forget to vote for tomorrow. This is your agricultural news and markets update sponsored by AgriGold for Central Illinois and Kyle Bumstead from Allendale Incorporated. He's your commodity broker. On Tuesday, November 5th is the presidential election and Senate races in the country, especially in the Congress. Illinois has a record yields in Central Illinois. However, there was field fire in McLean, Fulton counties in Central Illinois. You know the yield's nearly 200 bushel per acre. So the weather was perfect for the harvest season in Central Illinois. In Kansas City, Missouri, it's the National Farm Broadcasters Convention on November 13th and 15th. This is your agricultural news on Back Roads of Illinois, powered by AgriGold and Kyle Bumstead from Allendale Incorporated. Get the most for every acre with AgriGold seeds for Central Illinois. We were back with Bill Harvath from 834 Hedge. This is your opening numbers of the commodity markets from Kyle Bumstead from Allendale Inc. Corn futures are up at 5 to 10 cents at the half. Soybean futures are up at 5 to 4 cents. Wheat futures are up at 8 to 7 cents. This is your livestock markets update sponsored by Kyle Bumstead from Allendale Incorporated. Cattle futures are down at 5 to 10 cents. Feeder cattle are down at 8 to 9 cents at the quarter. Lean hogs are up at 3 to 6 cents. Crude oil are up to 9 to 10 cents per barrel. Dow Jones are up to 8 points. Get the most for every acre with AgriGold seeds for your field. You can visit our website at agrigold.com or call your local retail dealer today. AgriGold choose seeds for Central Illinois.
No.
On today's program on Back Roads of Illinois with Bill Harvath from 834 Hedge in Cedar Rapids, Iowa. The eve of the election, we were welcoming Bill to talk about the commodities markets on the show. Welcome, Bill. How are you today?
Caesar, glad to be here.
This eve of the election, we are watching the presidential election for tomorrow with tariffs and demand for export. What is your takes on tomorrow's election?
like it's a neck and neck race. Either I guess one a lot more in 36 hours. It's interesting. It's definitely of interest to the agricultural world here in the Midwest. As we look back to the trade wars of 2018, it's believed or it's estimated that U.S. agriculture lost around $27 billion worth of ag exports in the 2018 trade war. At the same time, obviously, that's a big impact for farmers. But at the same time, I also saw that earlier this month or late last month, the Farm Journal surveyed 5,000 readers, and 70% of Farm Journal readers said that they thought a Trump administration would be have a more positive impact on agriculture versus the Harris administration. So while in agriculture, we know that export trade war would not be good. It seems like the ag producers, at least the ones that subscribe to Farm Journal, are supportive of Trump. It's important to note that in soybeans, U.S. soybeans, our number one customer for soybeans is in fact China, and you would assume that any trade war tariff situation would be targeted towards China. And it's important to realize that out of uh, all of our soybean consumption here in the U.S., roughly 42% of that is done or consumed in the form of export. So China by far the number one customer. So for soybean people, this is an issue, something we're going to have to keep an eye on. Corn, the total export demand of our corn crop, we export roughly 15% or are projected to for this year export about 15% of the corn crop or of our consumption in the form of export. So it's important for corn, but it's much more important for soybeans.
Do you have some concerns about the tariff talk to China and Mexico? Which net export is up for right now?
Yes, well, exports have been good, and I wonder if some of these countries aren't anticipating a Trump victory and trying to get some stuff on the books ahead of time in case there are some tariffs. And as I said, we're heavily dependent on China in terms of soybean exports. Mexico's our leading customer in corn. That could be an issue there as well. So we're going to know a lot more in 36 hours. I think here in a couple of minutes, we're going to look ahead to the crop report we've got coming up this week. I think maybe the USDA will kind of hold pat and not make big changes on exports until they see the results of this election.
Okay, Bill, what is your sources for the world agricultural supply and demand estimate report on this Friday from the Department of Agricultural?
The WASDE report out on Friday, you can certainly build a case that exports have been good enough in corn ethanol. Corn for ethanol consumption has been really good so far at this marketing year that the USDA would be justified in raising both exports and ethanol demand. Over in soybeans, I think you can build a case that the exports have been good enough that the USDA could justify raising their export projection. But like we talked about a couple of minutes ago, with potential for trade war and tariff threats with a Trump election, the USDA may hold pat on this report and not make any big changes on the export figures. In terms of production, as we talked about at the very beginning, yields were huge. Of course, I'm right in the middle of it. I might be a little bit biased, but I wouldn't be stunned if the USDA did raise the national average yield just a touch in both corn and soybeans. But like I said, I'm right in the middle of some gigantic.
Same hogs markets for today's close.
We had a little bit of additional setback in this cattle market. I've been fairly positive about this cattle market, but as I look at the charts from the last couple of weeks, we kind of got in the neighborhood of some important highs around that 190 level on December cattle. We rejected off that level and we're significantly below that right now. The cutout continues to sell off, and as long as the cutout sells off, it's going to be tough for this live cattle futures market and live cattle cash market to hold together. It's important to note that we finished today at 180, a little bit over 185 on December cattle futures. A year ago today, or just 1 year ago, the cattle futures on the December contract closed about 184. And it's important to note that over the next month, we lost about $20 a hundredweight. So as a cattle producer, that's got to be fresh in your mind. Probably is prudent to maybe take a look at some ways to protect yourself as we go into the end of the year here.
How are things with the packers for Iowa plants and in Nebraska?
Either can you shoot me that question again? I've got a carpenter
How
banging
are
in the
things
background.
with the packers for Iowa plants and in Nebraska?
Yeah, well, I think everything's okay moving from a Packers standpoint. It seems like
Do you have any final thoughts or recap of our conversation?
Yeah, I didn't say much about this hog market, but we're in a very strong fall seasonal rally in the hog cash market and futures market. I realize producers have been in the red for several quarters here. A move like this that we've had here this fall would be tempting to maybe take some protection. I'm very nervous about a net short position in hog futures right now. This market just feels like it wants to be higher. We get these counter seasonal moves higher in the fall this time of year. A lot of times it can keep rolling. The funds on the Commitment to Traders report released last Friday afternoon so that they are now holding a record long position in lean hog futures. That could be a little bit concerning if they decide to liquidate. We'll have to keep an eye on that. As a pork producer, these levels are very tempting as we look at the end of the quarter, first quarter of next year. I might be tempted, if you do something, do it in the form of options to leave that top side open at the close here on Monday. Looking like maybe tomorrow you could do something like an 80 put in December hog. Finance the majority of that put by selling an 87 call. That locks you into a futures position with 80 at the lower end, 87 potential for the upper side, and probably get that option window done for less than 50 cents. I think it'd be something prudent, but the funds extremely long that they can liquidate at any time.
Where people can find you for your consulting services for their grain marketing and livestock marketing for today's management risk.
Yeah, well, we think risk management obviously going to be extremely important here in the next couple of years after a pretty good years. If you want to look at what we do, maybe talk about our philosophy. We're 88 Head. Our phone number is 844-88-HEAD or 844-884-3343. Or you can always hit us on the internet at 88head.com.
Thanks, Bill.
Peter, it was a pleasure.
Cedar Rapids, Iowa, on back roads of Illinois. This is close bell numbers of the commodity markets from Kyle Bumstead from Allendale Inc. January feeder cattle $0.775, closing $242.4255. February live cattle $975, closing $185.925. February lean hogs $700, closing $185.325. March corn plus 0 single quote 6, closing at $4.30 single quote 0. January soybeans plus 3 single quote 4, closing at $9.97 single quote 2. December Chicago wheat minus 0 single quote 2, closing at $5.87 single quote for December KC wheat plus 3 single quote for, closing at $5.83 single quote 6. Closing quotes provided by Kyle R. Bumstead Branch Office Manager Erickson. Nebraska 308-708-7340 Allendale, Incorporated. Thanks to Allendale Inc. Let's take a look at the dairy markets for today's open. Class 3 milk is down to 4 to 5 cents to the quarter. The dairy market says reflection for right now, but it's remained unsteady to the Class 3 milk in Wisconsin and northern Illinois near Rockford. This is your dairy update on Back Roads of Illinois. Thanks to Bill Harvard app from 834 Hedge in Cedar Rapids, Iowa. We're running out of time on our show, but you can listen to our show wherever you get your podcast. That's been Back Roads of Illinois. I am Cesar Delgado. Have a good day.